This is our Forex blog for March 15th, 2013. There's dozens, if not hundreds of ways to trade with our software, but I'm going to go over in our Forex blog the easiest ways. If you're a brand new trader, you should be able to pick this up and trade within 1 week. These are our currency indexes. We statistically compare every currency to every other one and have done so for the last 7 years to come up with statistical tools that show how strong or how weak each currency is, the dollar versus all the other dollar pairs, euro, and so forth. We now have currency indexes which graphically show what the dollar's doing for, with all the pairs: euro dollar, pound dollar, dollar Swiss, dollar CAD, Australian dollar, New Zealand dollar, dollar CAD, etc. Same thing with the euro: euro dollar, euro yen, euro pound, euro Swiss, euro CAD, euro Australian, New Zealand. And so you can easily see on the chart what it's doing. You can draw trend lines. You can see the previous day's high in dotted green, previous day's low in dotted red, hourly moving average in gray. Green is the 15-minute moving average. And so above the moving averages and above the point of control, it tends to be bullish. Underneath the point of control, it tends to be bearish. And this does act as resistance because it's where most traders have positions in all the yen pairs. So let's break this into different parts of the day and just kind of look for trades before 4 o'clock, from 4 to 8, and then 8 onward, just to kind of let you segregate this. Most people don't trade for more than a couple hours. So if you were trading this earlier in the day, you can see the dollar is above its hourly. Unfortunately, the daily and weekly trend is down. But if you wanted to look for buys, because it is above its hourly and the last move up was stronger than the down move, you certainly can do that. But once it breaks underneath the hourly, you got to look for sells, especially since the daily and weekly trend are down. So you have a nice sell right here at the hourly at 230. The euro is above its hourly earlier in the day. So basically the first 4 hours of the day, if you were going to trade the euro versus the dollar, you'd be looking for buys. So let's start with that one. So here we have the euro dollar starting the day off. You can see it's kind of going sideways. It's above its hourly. On the range chart, you can kind of see a breakout right here. You might have made about 10 to 15 pips there. If you bought this little signal right here, you would have had a 5-6 pip loss, and then you got a decent pullback. I like nice 15 to 25 pip pullbacks, especially with the range chart. This is a 5 pips per bar range chart. Anytime you have a 4 or 5 bars in a row, red with one green bar after a decent pullback, looking at the indexes, we knew that it was strong. Also note on the 5-minute chart, you have a nice little diagonal right here. When it breaks out above that, you go long, and you just kind of follow it up. And you can see that trade, you would have been in around 20 and out around 55. Nice 35 pip win. And then a little bit later, you have this nice little sideways rectangle. Anytime you have a rectangle pattern breakout, it's a pretty high probability. And guess where it went? Right to our 2.0 containment band, which frequently is the end of the move. So that's the first one. Every time I turn the drawing off to go to another chart, it's going to get rid of that. So from 4 o'clock onward, you can see that, especially once the dollar broke underneath the previous day's low, somewhere around 6 o'clock, and the dollar broke down underneath yesterday's low, the euro broke out above yesterday's high. That's the reason for this wonderful breakout move. It's a very high probability trade when you see one currency above its previous day's high, and this is comparing the euro to every other currency. So let's take a look at some other ones. You can clearly see with the yen that it's underneath the point of control. The daily, weekly, monthly trend is down. You might have looked for sells earlier when it was underneath the previous day's low. You might have got stuck into one right here, and then you have a nice little pullback trade right here that failed. We're obviously looking for sells here. You might have had a loss or two before you had this big win. And by using currency index charts, and not just our statistical tools, you can actually see when trend lines are broken. It gives you an excellent time to get out of that trade. You have an hour-and-a-half move here from 5 to 6. Notice from 5 to 6 in the euro, it's exploding. So you got one currency going up, the other one going down. It doesn't take a rocket scientist to know that you want to, and I'm going to put these the same color so when I change one of them, they'll both change. We're looking to buy the euro yen. Okay, so looking at these charts from 5 to 6, we can clearly see the euro's above its hourly during that whole time. Got a nice little pullback trade right here with the trend line over the bar's high. Breaks out, you would put your stop underneath here. And just like I said, from 5 to 6, the euro just kept going. If you put a trend line on the euro chart, the euro index chart, you would have saw it just kept going. Same thing with the yen. And you have a 60, 65 pip move right here. With the range chart, it's also very clear. And I have some other indicators on this one. This is yesterday's point of control where the yellow is, and the green is the value area high, which means basically yesterday it spent 68% of its time between this green line and the red one that's underneath here. Let me just zoom out so you can kind of see that. This is where it spent 68% of its trading activity. Typically above the upper value area you want to buy, below the lower value area you want to sell. And they also make excellent support resistance. So if you're using a range chart, just a wonderful looking pullback right there. You can put your stop a pip or two under there, and you're literally risking under 10 pips, and you can clearly see that this just is going up. And be aware that as this explodes up, if you look at our 5-minute chart, the the perfect oscillator's 80 level has not yet been hit. Typically when these 80 levels get hit, you're going to get a reversal. And it doesn't always happen. You can see for the last week or two, it's been nearly perfect. This one right here obviously failed. The second level down here is what typically happens. Price explodes down, hits that 80 level, and then you get a reversal. You can see the price reversed 50 pips off of there. But the point is, using the currency index charts, you have an amazing trade there in the euro yen. Let's take a look at also the pound. Its daily and weekly trend is up, the monthly trend's down. It had a false breakout underneath the hourly moving average and then came back up to it. You can see kind of a trend line over all that area is high, and also broke out above the previous day's high. That's a tremendously strong buy signal for the pound. You want to buy the pound versus the weakest one. And also note the trend line underneath the lows on the way up. Once it breaks that trend line, this was the beginning of the down move in pound pairs. And you would not have known that if you did not have our software with our indexes on every single currency. No one else is offering this to retail traders. But I do believe that the biggest traders in the world have created something similar to this for themselves, because you'll see double tops, double bottoms all the time in this tool that has such a high percentage accuracy. As you can see here, broke the trend line. You were looking for sales. It took it about 2 hours, and then it collapsed. You wouldn't have gone aggressive there. You would have anticipated possibly support here or here at the previous day's high. Once all those areas failed to act as support, then the safest trade for the short side was right here when it broke down at 11. Now, which one was strong at 11? Well, it wasn't the dollar, it wasn't the euro. At 11 o'clock, you can see this one broke above, or 10 o'clock, it broke above the point of control for the previous day, and you have a nice little pullback trade right there. The pound yen sell a little bit after 11 o'clock is pretty much a no-brainer, because the pound's uptrend is over and the yen's strong. So you can use this to trade with the trend and also against the longer term trends when you spot these high probability trades. It's going to take a while for all the signals to come in onto the range chart, but you can see at 10 o'clock really that pound, let's go back and look at it one more time. I forget the exact time. Yeah, the pound uptrend pretty much ended when the trend line broke, and that would be at 8. It broke its hourly moving average at 9. It was going sideways, and around 10:40 is when the real downtrend began. So 8, 9, and 10:40. Let's go back to the chart. Let's draw those times on there. 8 is when the trend line got broken. 9 is when it broke, I think, the hourly moving average, and 10:40 is the highest probability as far as odds. Now, unfortunately, this one's already been falling at that point. If you saw a currency, go up, and this one wasn't strong enough to hit the upper containment bands, goes sideways for 2 hours. Remember our rectangle pattern right here. Very high probability trade at 9. But you knew about the possible pound reversal at 8, and the yen has been going up and getting stronger starting at 8 as well. So here's some of the trades that I would consider very high probability. Right at the beginning here, once it broke the hourly moving average and came back up and tested it right here, and anytime you get a little flag pattern breakdown right here, those are the highest probability. And to a slightly lesser extent, I would have taken this trade too because it went sideways for 40 minutes. You sell it once it breaks the low. I'm going to be trading a little bit less lots right here. I'm going to trade, if I talked about my normal trading size, this would be maybe 70% of my normal trading size. This would be maybe a little bit bigger my normal trading size. This would be probably 60% of my normal trading size, and this would be half of my normal trading size. I base my trading size based on the odds of the trade working and how many pips I'm going to make if it works versus what I'm, it's kind of a gut feel thing from experience. When the price is above the hourly moving average, it's likely to come down and hit this area and possibly bounce up. So you don't have a big potential. It's a pretty high probability. I'd estimate it 60% likely to work, but it's only likely to go to here. Once it broke through there and prices showed you that, and proved to you that it's weak, this trade right here is very high probability. That's why you want to do a very big lot size, bigger than your normal size, because if this trade is going to work, usually it's going to go to the lower band, which guess what? It did. Also note the minus 80 level here and here. Once these minus 80 levels get hit, typically when they hit the upper band, that adds to the probability. So I'm going to go kind of ultra aggressive at this hourly moving average point right here. So that's my line of thinking. And sometimes I have small 50% lot trades on. For example, this last one right here, and it falls 40 pips, and I have half a position. I would have made half of what I normally would. But think of your main goal is to not lose your money. And lower odds trades that are maybe only likely to give you 10 or 15 pips, you don't want to bet the farm on. And it is near the lower 1.5 band, so it could hit that level and bounce. So let's go back and look for some other trades we have here. Obviously the dollar just trending down all day long. The yen, once it kind of notice a double bottom right here. Now, the only thing that I don't like about the yen's chart as far as buying that is it's underneath the previous day's low, and the daily, weekly, monthly trend are super down. But it did break out right here, and especially once it goes above the point of control, above the hourly, back in yesterday's range. From 9 o'clock, you can start being a little bit more aggressive, and at 10, even more so. And another one to trade this against would be the dollar yen. Weak dollar, strong yen. You want to look to sell the dollar yen. It's that simple. And both of them were weak earlier in the day, and that's why when two currencies are strong or two currencies are weak, you're going to get a very narrow range, choppy action. But remember at 9, the yen started to be really strong. This is towards the middle of the range. Remember, the lower bands are always potential profit targets, and most of the time the price will stall there and oftentimes reverse. Sometimes it reverses at the 1.5. If it's very weak, it will go to the 2.0 in white, and occasionally it'll go, depending on the currency, the pound yen maybe 30 to 50 pips underneath there. It might shoot for half an hour, and then explode back up above the bands. They rarely stay outside the bands for more than an hour or two. I'm not saying that you should aggressively scale in with every penny you have underneath there, but I've done that before and it works more than it doesn't work. But it also occasionally the price continues. You know, it might be 1 out of 50 times, but you can wipe your account out by getting in the big position. So let's take a look at some other of the main 8 pairs. Here, the Swiss, kind of going sideways, breaks out above the previous day's high. The Australian, now the daily trend's down. Unfortunately, the weekly and monthly trend are up on this, so it's a little bit lower odds as far as that goes. But from 5 o'clock onward, the Australian's a pretty decent one to be looking for sells until it breaks that trend line. And notice how you really get a feel for, you know, you want to just keep looking to sell the Australian until this trend line gets broken, and then you might want to, because it's so far underneath the previous day's low, it might come back up and test this area and find resistance there, and that's a good place to sell. But these areas tend to act as magnets. You can see the CAD here. It broke out over its high and then immediately came back into the range of the day. And so this place right here at around 9 or 8:45, pretty decent place to sell it. The only downside of that is the daily, weekly, and monthly trend are up at that time. But you can see the Swiss super strong, the Australian super weak. So, you know, this is common sense stuff. It doesn't take a rocket scientist to say you want to sell the Australian Swiss. And let's go back and look at the exact time that happened. The Australian got weak at 4, and the Swiss got super strong at 5. So really between 4 and 5, one of them give you a signal at 4, the other one to give you a signal at 5. You notice here on the chart, not much really happened until after 5. When one of them was weak and the other one was strong, guess what? The trend is down. You can see it fell from around 9,800 all the way down to 40. It's a 60 pip move. You know, you can see yesterday it was underneath the lower band. You know, you have this nice little pullback right here. It's clear to see on especially the range chart. Notice how much the range chart packs a lot of time in a narrow range when it's not moving. You know, during this whole period here, when it's not moving on a 5-minute chart, you have a lot of bars. That's one of the reasons why I like range charts. Some of the trades you would take is that one right there, the pullback trade on this one. Let me draw lines underneath the lows just so you can see. Sell there, sell here. And again, when it's at the lower band, typically you're going to get reversals, especially when it's at the lower containment band and you have an extreme right here. You have another extreme right here. Notice you got to bounce off of that, you got to bounce off of that. This is a really high probability place to sell because the perfect oscillator is at an extreme high and the trend is clearly down. You can see, you know, on the range chart, it also gives you a signal right around there as well. Now, it only fell 25 pips, but 25 pips are 25 pips. So that's how you use our tools. It's as easy as I've ever made it. We have many other tools that will help you, but trying to keep things simple. You know, I would, if you're going to use these charts, I would use the daily and weekly value areas, previous days, weeks and months, high and low, which I don't have on any of these charts, but just trying to keep things at the most basic level. And these are our FX trade signals, which, you know, when you use our currency indexes to find the best currencies, they're very useful. But typically look for 15 to 25 pip pullback or a half an hour to 2 hour sideways range rectangle breakouts in these currencies.